be a great idea to do some backtesting together. And specifically on the LBS strategy I shared before in the video before. I will share a link below in the description. If you haven't watched that, watch that one first, because otherwise you have no idea what we're doing here. But for the people that watch this video, I think it's a great opportunity to, now that the week is behind us and we have some NFP stuff that's evolving here, we don't want to involve in that, of course. So we can backtest the week together and see what the LBS strategy would have gained us profit-wise on the GBP USD pair and the Euro USD pair. So I prepared the whole session. So we're not gonna backtest it literally and then I set out all the steps and stuff like that. No, I have every day, and the setup of every day, I've already prepared it, because it's also a learning experience, also still for me. What are the best entries in the strategy and which ones are more common? So it really helps for me to look at them with the price action already on my screen to see what would have been the best entry. And would I have taken that entry or not? So what I did was very simple. Marked out every day. Now let's start with today, and then we'll walk our way through to Monday. Today's NFP. So what you see is consolidation. This is a day you should not be trading at all. I didn't tell that in my rule set in the previous video, but I know that for people that trade Forex and trade indices, it's just a common knowledge to know you don't want to trade in days of high volatility. And what I mean by that is, especially if you go to forex.com and you watch the economic calendar, you go look for the red folders, most of the times on USD, and the most important events are the CPI, the FOMC, and the NFP. So don't trade those days. But I did mark out the LBS setup. So we would have gotten tagged in. If it makes this target, I don't know. So I didn't trade this at all, but it was just a fun thing to mark it out. So if we look at the LBS range, I saw that we had a big order block, the blue box, and nothing more. Actually, it's just a really balanced price range because of all the consolidation. Here there was a fair value gap. So what I would do was just enter in this fair value gap on the order block. So this would have been kind of the setup, but it's not really a valid day, like I said. So we'll leave it like that. And we go to Thursday, and let me use the replay because that's a little bit more easy when I switch time frames. So if we do it like that on Thursday, so yesterday, we had this trade. And if I go to the 15-minute, you see there was just a 15-minute order block. I just placed the trade on that order block, stop above, and also on the 5-minute there wasn't much there to look for. So just use the order block. It's the most stable stable entry. So that's the easy one. So you enter in that, you just put your stop above, and then you let it run and take out. Or this one was actually, this was exactly 2.5 before it retraced back. But we don't move stops, so it would have eventually, oh no, here, of course. Yeah, it would have taken you out. So even if this wasn't to the pip hit, it would have still taken the profit. So Thursday was a profitable trade. Then we go to Wednesday. Where is the setup? Oh, there it is. All right. It was a no trade. Oh, let me replay. Yeah, this is already past 8 a.m. So we had a bearish breakout of the range, but price never came back before the 8 a.m., which was, it even didn't break. Oh, it just broke out at 8 a.m. Still, let me see. Yeah, it broke out here. So that would have been valid to look for a trade. It was 5 minutes before 8. I don't know if I would have taken it. This was a no trade for me. But let's say you see this breakout and we're in replay. Let's do this together now. We're in replay. And we see this. And we're like, that's a candle close below. So we go to the 15 minutes. We only see this order block. And the start of this big order block. Let me go to the 5 minutes. What do we see? Not really anything. So this is the start of the big order block. There are some fair value gaps in here. Yeah, I don't think I could have taken a trade with this parameters, but okay, who knows? This could have been the order block. And if you would just want to go like, well, this is just the start of the order block, I don't care if my RR is good. You could also enter this line, place a stop there, and 2.5. But personally, I don't like this because you have to go way low. In this case, the day was very bearish, but yeah, I think it was a hard one, a tough one. Yeah, it would have hit. It didn't hit that one. It was a tough one to get in, to say the least. So I don't think I would have gotten into the trade, if I'm just honest. Also because there wasn't a fair value gap. I like to, on the smaller blocks, if I don't see a real good block, you could enter the fair value gap. But no, to be fair, this was just a no trade day. So we go to Tuesday. Also no trade day, but let's zoom in because we might have missed something after the break. Oh, that's a big break. There's no retracement at all. So yeah, we could have marked out our PD arrays and maybe even marked out a trade opportunity, but if I look at this, it just runs away. This week I traded most on the Euro USD, and that was because of the Euro GBP chart. I always watch that chart to see which pair is more weak. If one pair is more weak and we have a bearish bias, then that pair oftentimes runs faster. So if we have a bullish bias, you want to have the stronger pair, and then yeah, it's just more high probable. So a lot of times, this week at least, my trades were on Euro USD because of that, because I changed my, how do you say that? My bias was based upon the analysis of Euro GBP. So that's also a thing you can look for, but you have to know what you look for. Otherwise, just follow this strategy and then you have some no trading days. But I thought I was on Euro USD this week on Tuesday, but can't remember exactly. So we'll have a look at that chart in a minute. So we go to Monday. And what do we see? We have a stop out. Very clear. There was some sort of point of interest for me here, and it tagged in and it stopped out. So this was a kind of, yeah, not a really good week on GBP. So if we go look at what the P&L is, let me reset the chart. So this was our trading week with all the possible trade opportunities. And this is what we got out of it right now on testing. So we had a loss, we had no trade, we had a win, and today is NFP, and you shouldn't be trading that. So we had one win, one loss, that makes a total of 1.5 RR. This whole week had a bearish bias. So that's also a nice one to compare with Euro USD. So we'll have a look at this pair right now. If we go to Friday, 5 minutes, of course, this is NFP, so this is today. This is the setup. I think it will stop out, but just don't trade at NFP. We'll go straight to Thursday. Thursday would have been a win because of a 15-minute order block. A big order block. Oh, where are we on the chart? I should have rewinded. So we have a nice order block here. Also because we broke structure to the upside on the 15-minute here. Makes this, they also call it like a demand zone, really valid. So this would have been an awesome trade of 2.5. When we go to Wednesday, oh, here we are. Wednesday, really clean trade, actually. Yeah, but hard to get in. I remember this. That's because we had like a really balanced price range. So price didn't leave any gaps. Order block just followed by another order block, by another order block. So I just went for like the most recent order block within the range. This was also one, but this one was in the range, and it was just like, okay, let's try that one. But because these also are order blocks, these ones, so yeah, where to place a stop, right? But even if you would have placed a stop all the way up here to just be sure, you would have still made the 2.5. And if we go to the 5 minutes, there also wasn't any PD arrays to get in on. It was just one big balanced price range. So, and then I prefer the 15-minute, and I just take the most, recent order block. That makes a little bit of sense, but it doesn't matter. It was a profitable day. So that's awesome. Let me go to the Tuesday of the week. This also was a profitable trade, but let me look at the PD array I chose. So if we go to the 15, you can see here I entered on a 5-minute fair value gap, not on an order block. And let me see what was the reason for that. Yeah, that's also because all the blocks are blocking each other. So then I will go watch for the 5-minute. Maybe there is some order block. So here it broke out of the range, came back in. So we could have chosen like this order block, but because of this imbalance, and we didn't have like a really good order block on the 15-minute, you can take a chance to go for this. However, I don't know if I would have gotten in this trade. I don't know if I would have still used like a 15-minute, and if I would have been stopped out then here on this wick. I can't remember being in this trade actually, so I don't think I traded it. Maybe the bias was different than GBP. Oh no, that was a bearish week. So I have really no clue. Also time-wise, 8 a.m. So it should have been the 5-minute fair value gap, but don't know if I would have traded this, but still it's good to look at it and see if there is an imbalance that they will trade up to it. So now we know that. And the previous trade on Tuesday had no imbalances, only order blocks. So that are the first PD arrays to look for, and then the fair value gaps. This trade on Monday could have been profitable. However, structure-wise, just market structure-wise, if you look at the market structure, you could have just said that, all right, we have the low, then we made a high, but it didn't break previous. Yeah, it did here. Okay, all right. So we have a low, and then a high, and then it can make a low again. So something like that. And then it broke this low, probably something like that. So this is your strong low, and this last demand zone is what gave the structure break, made the break of structure. So it can retrace all the way down to this final order block. If I would have entered here, I don't know, because we also have a big fair value gap here, and I also could have drawn the order block from the first candle, because that is like the complete zone. This is the extreme zone. So what if I would have entered on this top, and then, no, that's not a 2.5. So the question is, do you go for the extreme zone and with the possibility you miss the trade or not? So this absolutely could have been a winner, but the question is, would I have taken it? So to be fair and honest about that. So if we go to the 1 minute time frame where we lay out all the trades, so it's really good to do this also with the price action already on the chart to see what would have been the best entry, and just to see how high probable it would be that you would take that entry. So if we look at the P&L and we look at, okay, all right, we nailed them all, but probably not. I think I would not have nailed 2 of them. Then this would have been the case. You got 4 winning trades. So that would have made a total RR of 10. But if you take 2 out, so let me see, in one of them, I guess the entry would have not been hit, and one of them a loss. So maybe it might have been like 6 RR or something like that. So total with GU could have been 6, 7 RR for the week. That's still enough. My personal goal is 6 RR per week. So it only with trading strategy, it would have been enough. So what the funny thing is here is bullish, bearish, bearish, bullish. GU was totally bearish. So the thing was, let me see. There was a funny thing yesterday, I remember, because I took the trade on GU, or no, one of them. But the GBP was bearish, and this one was bullish. But I think GBP hit before euro, so GBP already went down. Let me see. Yeah, it already went down. This one was hit, and after that it became bullish, and after that the London bias for euro was valid. So one of the things that's really nice to look at is if you can add to your current trade, and with that, like make your RR even better. So I want to give you an example, because yesterday I tested it. I didn't trade it that way, but I tested it. And what I saw, and let me just replay again, on Thursday, was some interesting stuff. Oh, there goes NFP. Yeah. So what was interesting was all my alerts flopping and groping. The interesting thing was that I was testing it. Let me see, what was it again? Oh yeah, also news yesterday. What I saw was this entry. But then on the 15 minutes, I guess. No. I saw another entry. And I can't remember what it was. Oh, now I know. I did not in my when I just paper traded it yesterday, I know I entered on the fair value gap, not on the order block, because the profit only came when we came up to there. So let me draw that out. Then it was this fair value gap. Yeah, the 15-minute fair value gap. So I paper traded this one, this entry to be exact, and 2.5. And I know this first one didn't give me the profit. So what was I doing? It was like something like that. So what was the entry? Or maybe this, oh, this stop was, that was it. The stop was below. Oh no, this is the fair value gap. No, the stop was below the low. So when I saw it on the chart, I was like, okay, let me just paper trade it. Yeah, this was exactly the 2.5. I did something like this. So I entered on the fair value gap. Just the first fair value gap that was here. So it went in drawdown, it came up, it did not take profit. I was like, ugh. So then I saw a second entry, and I think it might be on the 5-minute or even time frame below. It came back, yeah. I think it was when it broke structure again here and it got into this fair value gap. I can't remember again, but this is a way to add to your long. If your London bias is like this, you can still, when the structure breaks up again, this was a fair value gap, place a stop below the first candle of that, and also take it to the same high. So within the same trade, you could have made like 4.5 RR just to add to your current trade. Would you do this with the total position size? Maybe not. Just take half of what you normally do. So if you divide this, then it would be 1 RR. So you could have added to this and made like a 3.5 RR. And also the short on GBP on Thursday was the same thing. I also placed a second trade on that, a add-on, and it also made the trade like 1 to 5 RR. So that's another way to make it even more profitable, this strategy. But if you're just learning this, just take one entry and focus on the 1 TP, and that's it. So you can still be profitable that way. But as you can see, this week was a little bit tougher to make some gains. Last 2 weeks on GBP were really good with this strategy. So this is normal. It was a week with more news, no problem. It was a week with where GU and Euro USD weren't. There were days that they didn't have the same bias, so that can be confusing. Even yesterday, GU had a perfect bearish LBS and then Euro a perfect bullish LBS, so that can also happen. So it's still a matter of just trading what you see, trading the high probable setups with good order blocks, stuff like that, and just do it. And just take your losses and take the wins, and it's in the end it's just a mathematical game of how many RR can I make. So work this out, do your own backtesting on this, trade the strategy, practice, and I'd love to hear what you think of these videos, and if it's helpful, if you learn a lot, and also if you are being extremely profitable with this strategy, just let me know. I would love that. So bye for now, and see you in the next video.